Welcome, listeners, to a deep dive. We're looking at, well, that really interesting place where traditional finance bumps up against crypto.
That's right.
And today, we're unpacking a specific story just hit the headlines. It's from Cointelegraph, titled Sharplink Gaming Boosts Ethereum Holdings to $457.
Yeah, and our mission here, for you listening, isn't just to read the headline. We want to go deeper.
Exactly.
Explore what this move means for Sharplink, how it fits into this whole trend of institutions getting into crypto.
And what it means for how you think about value, right, in these markets today.
Precisely.
Yeah.
We'll look at the facts, connect some dots, help you understand not just what's happening, but crucially, why it matters.
Okay, let's jump right in then. Sharplink Gaming, that's the trigger.
Yep.
Sports betting company, saw its stock jump over 7% on Tuesday, closed at $9.66, even ticked up after hours. So what exactly kicked off this rally?
Well, the direct fuel was Sharplink announcing they boosted their Ethereum holdings. ETH,
Oh, more ETH.
Okay. Yeah, quite a bit more. An additional 12,207 Ether. They bought these during the week ending last Friday, June 20th. Average price around $2,513.
Okay.
And this latest buy, it brings their total ETH to over 188,000.
Wow.
Which is valued at, get this, $457.4 million.
That's substantial. How did they fund that?
Right. So to pay for it, they sold shares. About 2.54 million shares, raised $27.7 million.
Okay.
And the vast majority of that cash went straight into bolstering that ETH position.
Right, right. And it's not just about, having the ETH sit there, is it?
Yeah.
What's the plan? What are they doing with it?
That's a really key point. They've stated that as of Friday, they have staked all of their ETH holdings.
And taped it all. Okay.
Yeah. And for you listening, staking basically means they're locking up their ETH to help run the network, sort of like earning interest.
Okay, so they get rewards for that.
Exactly. They're generating returns. Specifically, about 120 ETH right now, which translates to roughly $293,000. So it shows a clear strategy, not just buying and holding, but actively making those crypto assets work for them, generating yield.
Makes sense. Making the assets productive. But this isn't their first big ETH purchase, is it? We've seen this before from Sharplink.
No, definitely not the first time.
Tell us about the pattern here. What's the background?
So this latest purchase, it's really part of a larger, you could say, deliberate strategy.
Yeah.
Remember back in May?
Vaguely, yeah.
They raised a huge amount, $425 million. And that was specifically earmarked for buying ETH.
Right. I remember that now. That was massive.
It was. And then fast forward to June 13th, they made another huge move, acquired $463 million worth of ETH in one go.
Goodness.
And at that moment, that single purchase made Sharplink the publicly traded company holding the most Ethereum globally.
The biggest ETH holder among public companies. Wow. And who's driving this? Who's the architect behind this crypto-heavy vision?
Well, guiding this whole strategy is Joseph Lubin.
Lubin. The name sounds familiar.
It should. He's actually one of the co-founders of Ethereum itself.
Oh, okay. Right.
And he was appointed chairman of Sharplink's board back in May.
An Ethereum co-founder leading a sports betting company's charge into ETH. Interesting.
And he's been public about it. Said the goal of increasing ETH holdings is, and I quote, to create long-term value for our stockholders.
Long-term value. Okay.
Yeah.
But here's where it gets, well, complicated for you, our listener. We see these big crypto buys, the stock gets a bump. But what about the rest of the company? What does the broader financial health, the stock performance overall look like for Sharplink?
Yeah, this is really the crux of it, isn't it? Connect the dots.
Yeah.
That recent 7% rally, nice, but zoom out.
Okay.
Sharplink stock is actually down, way down, more than 87% from its peak.
87%.
Yeah, its peak was $79.21, just back on May 29th. So a huge drop in a short time.
Wow.
And the source material also flags a related event where the stock previously plunged 73%. That was around the time they were signaling a potential $1 billion ETH buy.
So volatility is kind of baked in here.
Yeah. Extremely. And then there's the core business, their actual sports betting operations.
Right. How's that doing?
Well, not great. For the quarter ending March 2025, net revenue is down 24% compared to the year before.
Ouch. 24%.
And it gets worse. Their net profit margin fell off a cliff, down 110% in the same period.
Down 110%. How does that even work? Losing more than they bring in?
Essentially, yes. Significant losses relative to their revenue, which, brings up that critical question.
Why? Why go all in on crypto so aggressively when the main business seems to be struggling so much?
It's a head-scratcher from a traditional perspective, isn't it?
It really is. That quote from Lubin, long-term value, feels bold. given those numbers. Is this some kind of master plan, like betting the farm on crypto as the new core business, or is it just, really risky?
It's definitely high stakes. It almost feels like they're shifting identity, right?
Yeah.
Less sports betting, more crypto treasury operation.
Like a MicroStrategy, but for Ethereum.
Kind of, yeah. It suggests they might be trying this radical asset transformation, betting that the value of their ETH holdings will eventually outweigh the struggles of the betting business.
So aiming for a valuation based on their crypto assets, not their revenue or profit margins from betting.
Possibly. It's like saying, judge us on our balance sheet, specifically this massive digital asset, not our traditional income statement. It's a very modern, maybe even paradoxical way to think about corporate value.
Okay, so Sharplink's strategy is, well, unique. But are they totally alone in this, or is this part of something bigger happening with Ethereum? We have seen more institutions getting interested in ETH, haven't we?
Oh, absolutely. Sharplink, while maybe extreme, definitely isn't operating a vacuum. Their moves seem to align with this broader trend. A real surge in institutional interest in Ethereum.
What have we seen?
Well, quite a few things recently. Just this past Monday, for example.
Yeah.
You had large ETH holders, the whales taking out leveraged long positions.
Okay, break that down. Leverage long.
Right. Long means they're betting the price goes up.
Yeah.
Leveraged means they're using borrowed money to make that bet bigger. Magnifies gains, but also losses.
High risk, high reward.
Exactly.
Yeah.
And this happened even with all the market jitters, the geopolitical stuff like the Israel-Iran situation. One specific example. A whale initiated a $101 million long position with 25x leverage.
25 times leverage on $100 million. Wow.
Big conviction, or big risk appetite, depending how you see it. Then, on Sunday, another big player scooped up $39 million worth of ETH.
Adding to their pile.
Yep. Brought their total holdings to over $300 million in ETH.
Okay. So individual whales are active. What about overall?
Looking bigger picture, yeah. It was reported last week that over 35 million Ether tokens are now staked.
35 million ETH staked.
Which is huge. Yeah. That's more than 28% of the entire supply of Ethereum, locked up in smart contracts, earning those staking rewards we talked about.
Almost a third of all Ether is being actively used to secure the network and earn yield. That's significant institutional participation.
It really signals widespread belief in the network and its potential for returns.
So, bottom line here. We have Sharplink making this massive, perhaps risky bet. We see other big players, whales, institutions, accumulating and staking ETH. Why? What's the draw, especially with market ups and downs? And for Sharplink, their own business issues.
I think what all these trends point to is a growing, maybe even fundamental belief among these institutional players in Ethereum's long-term value and its utility.
Beyond just speculation.
Yeah, likely beyond just short-term price swings. They seem to view ETH as a key strategic asset for future growth, for generating yield, like we saw with Sharplink staking.
So much so that it might even overshadow traditional business metrics for some.
It seems that way in Sharplink's case, potentially. It's really a testament to how the perception of digital assets is changing. They're being seen as legitimate, investable instruments, even when the broader market is shaky or when a company's traditional business is, well, challenged.
A strategic pivot, then, seeing digital assets as core value.
Possibly even a redefinition of what makes a company valuable in the 21st century. It's fascinating to watch.
Okay, so we've covered a lot. Sharplink Gaming's huge Ethereum bets, the stark contrast with their core business performance.
The struggles there.
And then connecting that to this wider trend, this rising tide of big money institutional interest flowing into ETH.
Yeah, what we've really unpacked is a company, Sharplink, making these enormous, seemingly calculated investments in ETH, driven by this idea of long-term value, articulated by, an Ethereum co-founder, no less.
Right.
And this is happening while institutions more broadly are embracing ETH, even when Sharplink's own traditional numbers look pretty rough.
So wrapping this up, here's something for you, our listener, to think about.
Yeah.
In this increasingly digital world, when you see a company's stock price jump mainly because of its crypto holdings, even while its main business is shrinking, does that change how we should think about corporate value?
Interesting question.
Does it fundamentally redefine things? And what could that mean for how we invest, moving forward? Could we be heading towards a future where a company's digital assets on its balance sheet matter more than its, say, legacy operations?